Hi there, and welcome to our video on how AI can already today bring your trading to the next level. This is not another ChatGPT video in which we let AI build us another trading bot, but a very real application of AI to your trading. You as a trader have done a couple of hundred of trades, maybe a few thousand if you're trading for a while already. Even if you analyze all your trades, that's still a very small sample size. What if an intelligent tool would analyze hundreds of thousands or millions of trades, learns from it, and then applies this huge amount of knowledge exactly to your trades, finds your areas of improvement, and is able to filter which trades you're likely to be profitable and which ones not? Thinking one step further, what if that intelligence actually exactly tells you this, or even filters and calibrates your trades in an optimized way and continues to improve this as it learns more? Well, I can tell you a lot of this is already possible for traders today, but let's go step by step. As a first step, let's deep dive a little bit into the theory behind it. You will be surprised what is all measurable and how an intelligent tool can use those information. Second, I will give you a few real examples of how this intelligence is applied for a trader. And last but not least, I will show you how you as a retail trader can actually already use this to your favor and how this whole process behind it works. I'm Jonas, co-founder and CEO of Hoc-trade. Let's get started. Alright, let's get started with a tiny bit of theory, but it will get very real in a minute when you see what I'm going to show you. There is a huge amount of trading relevant data an intelligent tool can use to learn from it, much more than you might initially think. In an initial step, we have a look at 3 layers. First, all your actions when trading and data points we can derive from this. Here are a few examples. Trade length, number of symbols during the day or traded simultaneously, order type of the entry, the way of exit, adjustment of take profit or stop loss during the trade, position size, and much more. Just this list already shows quite a lot. In the second layer, those actions can be merged with trigger points. Here again, a few examples, such as a large loss trade before entry or big win trade, your drawdown for the day, the month, a reverted trade, so a trade that was in profit but turned to a loss beforehand, a winning or losing streak. Again, lots of aspects, and if you imagine merging those now with all the points from the first layer, quite a lot of combinations. Now the third layer. What were the market environments prior, during, or after each individual trade? Did the trade follow the short-term, medium-term, or long-term trend? Or was it against the trend? Was there high or low volatility? An overbought or oversold market? Which geographic trading session? As you can see, just with these listed actions, combined triggers and combined with the market environments, we'll have millions, if not billions of combinations. In those combinations, we will be able to find patterns, behavioral patterns, which show a strong correlation to the outcome of the trade. The more trading data from more traders we feed into the system, the better it can find those patterns and learn, and then apply those patterns to your trading. See which apply and which have the strongest performance effect. In fact, we are already running all of this and we already found a lot of significant patterns, although we are just starting. Seeing those patterns and outcomes, we can actually oftentimes make sense of those from our own trading experience. And I'll give you a few examples in a minute of what we found and how this can be applied to your trading. One of the major strengths of this approach, that it's not a purely rule-based approach, such as many trading systems, thereby not reproducible and attackable. But if we add these behavioral aspects of your trading into the equation, the human aspect, it becomes completely customized to you. Yes, learn from many traders, but then targeted to your exact behavior. And thereby, it's not possible to copy it. It may not be very obvious to everyone, but especially traders which had a successfully running bot probably understand that this is one major upside. Let's move from the more theoretical part now to the second, more practical part and see how AI can already today significantly boost your trading performance. As said, at Hoc-trade we already run these analyses and we identified plenty of patterns commonly seen for traders with huge effects on their trading performance. We collected 40 of them in Hoc-trade right now already. Right now we collect them all in a dashboard and send you an alert in case we identify a new one for you or see that you act in one of your patterns again that more often than not makes you a loss. We are in the last steps of internal testing, but we'll start our beta test really soon. If you would like to have a completely free testing access and become one of our OGs, just join our Discord server, which is linked in the video description. All communication will be there. Lots of interesting things to come, that I can assure you. This AI can of course be applied to any trading market. We start off with crypto and forex trading though. Let's have a look at two interesting examples. One of my favorites so far is what I would call revenge trading. We found a pattern that the time between closing and opening a new trade can have a big influence on your performance of that trade. And that influence is especially strong if the previous trade was a lost trade. So what we can see here is that a trade which is opened within 5 minutes after a lost trade has a much worse performance compared to a trade in which the break was longer. In fact, this trader lost more than 1,100 US dollar on those trades opened within 5 minutes after a lost trade, or 7.1 pips, or on average 0.44% per trade. While in a trade which was opened with more than an hour break after a lost trade, the trader on average gained 0.24%. Now, thinking about it from a trader perspective and the emotions and behaviors a trader might have in such a situation, this actually makes a lot of sense. Shortly after a lost trade, you may feel disappointed, angry, and annoyed and want to make up for your loss again, therefore quickly entering a new trade. It also makes a lot of sense that this trade out of emotions is not as well planned, structured, and executed compared to a trade which you enter with a more calm and clear mind. We are only at the beginning of this intelligence entering and improving our trading, but this is a great example of how it can do it. In the second example, we found a really interesting pattern for traders during their lost trades. As said, Hoc-trade also merges the trading data with the price data of the trade. And it found that oftentimes your stop loss adjustment during a loss trade makes things much worse compared to your original stop loss level. So here we see that a loss trade in which the stop loss was adjusted, the average loss is 11.1 pips, while in the original stop loss setting, the loss is only 5.2 pips per trade. Looking at this from a trader's perspective again, this also makes a lot of sense. Accepting our losses is tough, is against our human nature, and oftentimes we try to save our trade by moving or even completely removing our stop loss, which actually makes it worse though. Again, all this data can be collected and analyzed pretty much in real time, and with more and more trades and traders, it gets more complete and accurate. So far, we have found and collected around 40 patterns, but this number will surely increase in the future. Quite a few of those probably have a direct impact on you as well. The great thing is that you do not need a very long trading history to find those patterns for you, as the patterns are already learned from a huge data set which give plenty of insights, and then applied to your trading and see whether similar significances apply. Okay, so how can this work and how can AI now directly improve your trading performance? Let me give you a bit of an overview of how we built this up. In order for the system to find and apply those patterns, quite a lot of data is needed, but we build a fully automated process so no manual work from a trader is needed. First, you can connect your trading account through a read-only API, or in case of Forex, through your read-only investor password. No access is given to the account, just the reading of past and new data is enabled. The trading data flows into our system and it automatically also retrieves all quote data, indicator data, news and much more to add this extra level of intelligence of merging your trading data with real price feeds, etc. As a next step, our tool searches for patterns in all the trading data and analyzes whether your trading shows patterns already previously identified from other data. All your outputs will be automatically presented to you in your customized dashboard. You will see the effect of your personal patterns, how you can improve over time, and most exciting, you will get near real-time alerts in case you act in one of your previous patterns again, a new pattern is found for you, or the risk profile of your current trade deviates significantly to your previous trades. Thereby, this continuously improving intelligence can already today strengthen your trading performance a lot, showing you exactly what kind of trading behaviors are averaging you a loss and warning you in case you're doing it again. I believe this is already extremely powerful, as we know that it's those trading behaviors that make the vast majority of traders lose money, and not the missing indicator or chart pattern. Even if you didn't know at all how to read a chart, you should still have a 50% winning probability and not the 90% of lost traders as we see it in the market. While this is not yet a fully independent AI that makes trading decisions, it's already a very big help for your trading, which gives you an edge over other traders. This tool, of course, is only the first step in the evolution process. And we have many exciting things already planned, areas in which AI can have an even more direct influence on your trading. But this goes a little bit too far for now and will be part of future videos. So if you're interested, subscribe our channel to stay up to date for all future developments. Now, most important, it's only a few days left until we set all of this live, what you have seen here in the video, and it can be used by the traders in our Discord server. It's all free, no strings attached, and of course we will also reward our first adopters. The only thing is that we may have to limit the accounts in the beginning to not blow up our servers. So if you think that's interesting, you're very welcome to join our Discord server. AI in trading is definitely one of the most interesting applications out there. And it doesn't have to be fully proprietary within a hedge fund that develops smart systems to execute trades, but can have a very tangible performance effect for all of us as retail traders. I hope you liked this small snapshot into how AI already today can improve your trading performance. And if you did, please leave us a like and subscribe to our channel. We are a young startup and we are only getting started in this. So lots of interesting content in trading, AI, and analytics to follow. Thank you for watching, happy trading, and stay safe. Please be aware that we at Hoc-trade are no financial advisor. This video is for entertainment purpose only.